Hey guys, Mike here. So obviously, super red day in the market, and it was the exact opposite of what happened yesterday. And there's a couple reasons for this. I mean, as you can see, though, it's just one of those days where it's like the exact opposite. And I told you guys yesterday, I was like, well, that was a suspicious rally when everything's up, right? And now, what do you see up? A transport stock, the ETF is shorting ARC. You see, actually, biotech was up. I'm not sure why, but didn't dig into that. Put in the comments if you know. Everything else across the board, I can tell, is red: crypto, travel, cybersecurity. Of course, there's your safe one: Dollar Tree, Target. Not surprised they're up, I guess. Maybe people go back into safe haven or something. Twitter, I don't understand why that's even green. But everything else is just a bloodbath. Red, from EV to China stocks to fintechs to semiconductors. And then all your big boys down there, absolutely bloodbath red, especially Tesla, down around 9% as I record this. And I'm kind of surprised it's not down even farther than that. And then, of course, the VIX didn't really go up nowhere near as much as I thought it would. But, of course, all the indexes are down, giving back pretty much all the gains from yesterday. And one of the big reasons was because an email, wink, wink, leaked by Elon Musk saying he'll cut 10% of his employees because he has a super bad feeling about the economy. Got leaked out, supposedly. I'm sure it got leaked out. But if you dig into it, he actually wants to cut 10% of his salaried employees. This comes 2 days after he said he wants everybody back in the office, which I assume most of those people are salary, by the way. And just goes on to talk about how he's got a super bad feeling about the economy, blah, blah, blah. On a side note, maybe if they do get fired, they can go work for Ford. They're hiring 6,000 people, they announced yesterday, for their EV production. So I'm sure they're highly qualified for that. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And of course, I don't work for Tesla, but the last I looked, I don't remember people who work on the lines actually building the cars or whatever it is they do, janitors and stuff like that, being salary, right? I just remember most office workers are, so I could be wrong. But, so it doesn't sound like to me they're laying off people that actually do the work that actually produces something at the company. They're laying off like management and above or somewhere, maybe HR department or whatever they're talking about. And the truth is, I take everything that's leaked out and anything he tweets with a grain of salt because I know he, a smart man, but he loves the power of his tweets and the power of his words. He loves to shift things and move crypto up and move Tesla up and down. And so, we'll see. If it happens, it happens. That'll be about 100,000 people. Again, it just said salaried workers. And so we'll see how that goes. But the other big thing was, this is where Scott in the comments, one of the viewers of the channel, was talking about, was the job report, right? The job report came out, and you can see payrolls rose 390,000 in May, better than expected as companies keep on hiring. And of course, the big question is, why would the market sell off on a good jobs report, right? Because isn't that good for the economy? It's good for us, right? People out there getting jobs, payrolls rising, whatever. That sounds good. Well, understand, and I like to break this down because I tell everybody to break things down like I'm a kindergartner when it comes to me and certain things. And so, to keep this in the simplest terms, anything that keeps the Fed on their current course of raising rates and rolling off that balance sheet is negative for the market, okay? The stock market, that is. And understand, what have they said? They have to bring down demand. It's the only way they're going to bring down prices and actually have price stability. Well, if companies are continually hiring, what does that mean? That means the demand for their products and services must be going up. You just wouldn't be hiring for nothing, right? Because what have you seen over the last few years? Companies just keep on hiring because demand keeps doing this, okay? What have you seen over the last month or two? A lot of hiring freezes being put in place, right? So what does that mean? Demand went here and it stopped, and now they're here because they're like, wait a minute, do we got too much staff, right? Or what are we doing here? And so as demand lowers, what you should see is they start to lay people off, right? Because they don't want to just keep people hired because they're good folks, right? And so, unfortunately, when you see a solid or strong payroll report and people still adding a bunch of jobs and the unemployment rate didn't go up at all, it stayed at 3.6%, that lets you know demand is still there, right? We're still spending and all that good stuff. And so, anything that keeps them on track for that. Now, understand, and I'm going to try to move this real quick. Think about it like this. Okay, you got fund managers. Okay, after the '08 crash, the government stepped in, the Fed stepped in for the first time really in history and started buying bonds and mortgage-backed securities and doing all kinds of stuff at the government level to cut taxes and find all kinds of ways to put money in our pockets so we'd put it in the economy, okay? And so understand, the Fed just didn't start doing this after the 2020 crash. They've been doing this for years. They just put it on steroids in 2020, all right? And so what had happened was, you hear people talk about this punch bowl, right? The punch bowl has been taken away. Well, technically, the punch bowl itself is still there, okay? It's like, this is the punch bowl, right? And pretend this is fruit punch. It's actually orange juice, but I didn't have any fruit punch for you. And so what they've been doing for years is just pouring it on in here and pouring it in here. Then 2020 hits and they go, whoa, rev it up, rev it up, rev it up, rev it up, rev it up. Okay, we got it, right? Boom. All right, so now here we are. And so this is still out there. This is what's gone, right? They emptied all of it. It's toast. Okay, so this ain't no longer flowing in the market. But this, which is the 2.3 trillion, is still out there, right? So what are they trying to do? They're trying to love orange juice. They're trying to drain it down, right? Every Fed rate hike. There's 0.5%. There's 0.5%. Wait a minute, how much are we gonna roll off this year? 47 billion? Or this month, excuse me. There we go. So they're trying to drain all of that out without, of course, crashing the market. By slowing us down so much, it pushes us into a recession, i.e. the soft landing, which everybody's debating on. And since they don't have a great history of this, that's what we're waiting to see. So anything that you would think is good for us regular folks is bad for the market, because it's making the Fed's job harder to bring down the inflation rate, okay? As long as demand stays high. So as long as we got all of this out there in our savings and still coming in our pocketbooks, we're going to keep spending. We're going to keep buying the services and the products and traveling and all that good stuff. And it's going to be really hard for them to, basically have price stability, right? And when you have what they call an overheated labor market, which is where you have all these jobs, not enough people to fill the jobs. When that happens, all these people have a lot more power to say, well, I'll come work for you, but I'm going to need $50 an hour, not 40, right? And so that's kind of the very simplified version. It's way more complicated than that, but I try to make it simple. So hopefully, it's kind of like my dam example I gave you about filling the supply chains and all that stuff. If you've never heard that one, let me know in the comments and I'll explain it. But everybody seemed to get it, and so hopefully that makes the simplified version of this makes sense. And so if not, let me know. Again, it's way more complicated than that, but hopefully that kind of makes sense. So anytime you see a really strong, good job report, or however you want to put it, come out, most likely the market will always sell off, because it means the Fed will continue to be forced in a way to continue to keep raising rates and rolling off the balance sheet and taking liquidity out of the market. And another way to look at this is, every one of us have either been an addict or know an addict, okay? I've never been an addict, but I have known a couple in my family. And anybody knows anything about an addict, and think of the addict as the stock market, after '08, it became an addict. It became an addict to this. Actually, not even that. It became an addict to this, right? The pouring of, them buying the bonds and mortgage-backed securities and all these different ways the government was putting money into the economy. And then 2020, same thing on steroids, right? And so now all of a sudden, it's gone, right? So what happens when you take an addict's addiction away, whatever that may be, cigarettes, alcohol, drugs, whatever. What happens when you take that away? How do they act, right? They throw a temper tantrum, they start struggling, all that stuff. And so that's what the market is doing. It's like, oh, and they don't know what to do, right? And understand, you have fund managers who started in '08 and right after '08. Well, that's about 13, 14 years ago now. Those same people after college, they went to get their master's and stuff, they're in their late 30s, early 40s. There's a lot, and I mean a lot, of fund managers who have never managed a fund without stimulus from the government. Never have. First time. This will be the first time they've gone through this, right? 2018, you got a glimpse of it, just a glimpse. They tried to do it, and the market just wouldn't take it. And so they caved and said, nope, we'll keep pouring the fruit punch / OJ into the market, okay? And so that's why this is a scientific experiment. This will be written about in books, and some of you maybe younger going to school years from now, maybe your kids go to school years from now, will be studying this in college, okay? This economic period, all right? And what the mistakes were and what the victories were and all this other stuff, all right? Because this is a scientific experiment we're living through right now. We've never had inflation and stimulus and all this stuff at once like we're dealing with right now. First time in history. So here we are. All right. So hopefully let me know in the comments if you got anything out of that, if it made any sense. Again, it's a simplified version. I know any economist watching this is going to be like, oh my God, that's just crazy. But again, I'm a regular person, so I like to explain it in regular terms. I'm not an economist. So hopefully you got something out of it. Hit the like, subscribe button if you did. Really appreciate it. Let me know what you think in the comments, and I'll see you guys later. Hold on. 25 more basis points is taken out of the economy.